Ever feel like you're drowning in information, especially when you're trying to, really understand those big success stories?
Yeah, for sure.
Like, how did they actually do it?
Right.
Especially, when it comes to things like investing and building wealth.
Absolutely.
Well, today we are diving deep
Deep?
into the world of Warren Buffett.
Oh, yeah.
I mean, the name, right?
Yeah.
It just screams success, long-term investment success.
Definitely.
And let's face it, a lot of wealth. We've got some great material for you today.
Yeah.
Tracing his journey.
Okay.
Our mission is simple. We're extracting those key principles,
Right.
the ones that made him so successful.
Okay.
So you can walk away and actually apply them.
I like it.
So it's not about giving you a complete biography.
Yeah.
It's about getting to the foundation.
Right.
What shaped him?
Yeah.
How does he think?
Makes sense. Even today.
I'm with you.
We're going way back to the beginning.
Okay, so early days, even as a kid, Buffett just did things differently.
Different how?
Bought his first stock at 11?
11.
Wow.
11 years old.
That's impressive.
By the time he was a teenager, already running businesses.
Seriously?
Yeah.
Like, what kind of businesses?
Oh, small time stuff, but still.
Right.
It makes you think, right?
Yeah, totally.
How did that early experience shape him?
Yeah, the real world experience.
Hands-on stuff.
Not just theory.
Exactly. Most investors never get that. It
True.
wasn't just numbers for him.
No?
It was about real businesses.
Right.
Understanding costs, customers.
Yeah, seeing how things actually work.
Invaluable later on when you're analyzing companies,
Yeah,
right?
absolutely. That groundwork is so important.
And then, boom,
What?
the game changer.
Okay, what happened?
Benjamin Graham.
Oh, of course.
The book, The Intelligent Investor.
A classic.
This wasn't just another book for him.
No.
It was like his investing Bible,
This is where he learned about value investing.
the core of his philosophy.
Buying something for less than it's actually worth.
Sounds simple enough,
It's brilliant.
but not easy, I bet.
Graham laid the groundwork for him. For all of us, really. This idea of a margin of safety. That
Okay.
buffer, that difference between the price you pay and the real worth.
Okay.
It's all about minimizing risk
Right.
and maximizing your potential returns.
Like a safety net.
Exactly. Always looking for a good deal.
I like that.
And he didn't just read the book. He went and studied under Graham
No way.
at Columbia Business School.
Wow.
Can you imagine
being in that classroom?
absorbing that knowledge firsthand?
That's incredible.
That mentorship must have been so valuable.
Oh, beyond valuable.
It's one thing to learn the theory.
Right.
It's another to see it in action,
Right.
to ask questions, have those discussions.
Yeah, that real world application.
It's something you can't get from a book.
Totally agree.
So let's fast forward a bit.
Okay, so we're moving on.
1956.
Okay.
Buffett Partnership Ltd.
His own firm.
He's putting these ideas to the test.
Yeah.
The results. Amazing.
Like what?
Consistently beating the market.
Using Graham's methods?
Yep.
That's impressive.
This is where his reputation was built.
Yeah, proving it actually works.
Exactly.
So this was a turning point.
A decade of running the partnership.
Okay.
It wasn't just about proving Graham right.
Yeah.
It was about refining his own style,
Right.
adding his own touch.
Within that value investing framework.
Exactly, involving the approach.
Makes sense.
Then comes 1965.
Okay, another big year.
He acquires Berkshire Hathaway,
Berkshire Hathaway.
the one and only.
Interesting.
It's a bit of a twist in the story.
How so?
Berkshire, back then, was a struggling textile company.
Really?
Yeah,
Not exactly the image that comes to mind now.
not at all.
So what was the plan?
Long-term vision.
Ah, I see.
He didn't buy it because it was thriving.
Right.
It was the vehicle
The vehicle.
for his long-term strategy,
Okay.
a platform to deploy capital,
Right.
to invest in all sorts of businesses.
Businesses he understood.
Exactly. It's like he saw potential where others saw failure.
That's fascinating.
And that vision, we see it now.
Yeah.
Creating long-term value.
Right.
Not chasing those quick profits.
The get-rich-quick schemes.
He was playing the long game.
Patience.
It's a key theme here.
Absolutely.
Building lasting value.
Right.
Sustainable businesses.
Not fads.
No, real strength.
Okay, I'm getting it.
And that brings us to his core investment principles.
The Buffett playbook.
Let's start with value investing.
Back to the basics.
It's deeper than just finding cheap stocks.
Explain that.
It's about understanding the company,
Truly understanding it.
like an owner.
Not just a trader.
Right, you got to get their financials,
Yes.
their competition, everything.
The whole picture.
Does the market price reflect its real worth?
That's the question.
And then buying only with that margin of safety.
Really, that buffer.
Protecting your investment.
Okay, makes sense.
Then we have the circle of competence.
Never heard that one.
It's simple but powerful.
What is it?
Stick to what you know.
Oh, okay.
Don't try to be an expert in everything.
Right. Focus on your strengths.
He realized early on that trying to understand everything,
Yeah.
every industry, every financial instrument,
That's too much.
it's a recipe for disaster.
There's stakes waiting to happen.
By focusing on what he knew,
Right.
he could make informed decisions.
Confident decisions.
Knowing your limitations is key.
I like that.
And then, this is a big one,
What's that?
long-term perspective.
Patience.
In a world obsessed with speed,
Instant gratification.
he holds on to investments for years, decades even.
Letting that compounding work its magic.
Compounding, it's a powerful force.
But it needs time.
Exactly. That's the key.
He's willing to ride those waves.
The ups and downs of the market.
Focusing on the long game.
A true differentiator.
Like planting a tree.
You got to give it time to grow.
I love that analogy.
He's also big on people.
People.
The ones running the companies.
Okay, management.
Quality management.
He's picky.
It's not just numbers.
No.
It's trust.
Integrity. Competence.
He wants the best.
Leaders who create value.
For the long haul.
He talks about partnering with them.
A team effort.
Giving them freedom, but offering guidance.
A true partnership.
And finally, financial strength.
Solid foundations.
Strong balance sheets.
Cash on hand.
Consistent earnings.
No shaky ground allowed.
It's about resilience.
Weathering the storms.
Being able to seize opportunities.
Makes sense.
He avoids companies with too much debt.
Right.
Unpredictable cash flows.
Too risky.
It all adds up.
Too consistent returns.
We see these principles in action.
Give me some examples.
Coca-Cola, American Express. Okay, big names.
And more recently, Apple.
Interesting.
These weren't random picks.
No.
These are durable businesses.
What does that mean?
They have lasting advantages.
Okay.
They stayed relevant,
For a long time.
adapted to the times,
Right.
but kept their core strengths.
It's that moat.
Buffett's famous moat.
Sustainable advantage.
Exactly. It's about having a real edge.
I get it.
Now, beyond investing,
Okay, so there's more.
Buffett has this reputation.
What kind?
Humility
Humble.
and clear communication.
Interesting.
His annual letters to shareholders,
Those are famous?
they're like mini business lessons.
For everyone.
He breaks down complex stuff.
Yeah, makes it understandable.
Even a little bit of humor.
Keeping it engaging.
That transparency, that willingness to share,
It builds trust.
it's part of his credibility.
Definitely.
And then there's the philanthropy.
Okay, giving back.
He's pledged most of his wealth,
To charity.
mainly through the Bill and Melinda Gates Foundation.
Wow, that's huge.
It's about impact.
Beyond just making money.
It's about making a difference.
Using your wealth for good.
Exactly. So what's at the core of his success?
The secret sauce.
Consistency
Sticking to his values.
for decades.
Unwavering.
He didn't chase fads.
He had his principles.
That was so good.
And he stuck to them.
Impressive.
Patience, of course.
Letting time do its thing.
Not panicky.
Riding those market waves.
He gets it. Building value takes time.
Right.
Short-term fluctuations are just noise.
Don't get distracted.
And integrity, you can't forget that.
Absolutely.
Honest dealings.
Ethical behavior.
It's fundamental.
It builds trust.
And it's led to incredible partnerships.
Makes sense.
And finally, that level-headedness. Keeping calm. Rational perspective.
Avoiding emotional decisions.
So easy to get caught up in the hype,
Or the fear.
but he stays detached.
A crucial skill.
So zoom out for a moment.
Okay, the bigger picture. Buffett's impact goes way beyond finance.
In what way?
He's a role model.
For what?
Ethical conduct.
Okay.
Intellectual honesty.
Right.
Commitment to long-term value.
It's about more than money.
Exactly. It's about doing things the right way.
Creating real value.
And his story, it's a testament to patience.
Discipline.
Good judgment.
Applied consistently.
It's a powerful reminder.
Of what?
Sometimes the simplest approaches are the most effective.
When done right.
So, for you listening today, the key takeaways.
The big lessons.
Understand the real worth of things.
Okay.
Focus on what you know.
Right.
Play the long game.
Patience.
Value integrity and good people.
Trustworthy partners.
And stay calm and rational.
Even when things are crazy.
And maybe most importantly,
What's that?
real wealth is about more than just money.
I like that.
It's about the value you create.
And the impact you have.
So, as you go about your day, Think about this.
Okay, give us something to ponder.
How can these principles, the ones that made Buffett successful,
Yeah.
be applied in your life?
Beyond finance.
In your work, your relationships, anything.
That's a good question.
Which one resonates with you the most?
And why?
It's worth considering.
I think you're right.